everybody. I hope you can hear me and you can see me properly. Can you please type 1 if you can hear me and see me properly, just to make sure? Okay, fantastic. Thank you very much. So let me introduce myself in the first place. Maria Osman, Director of Global Education Initiatives at IE, and it's a pleasure to have you all connected today with us. This is one of the sessions within the Leading Complex Times dialogues that we put in place. We've been doing this for a few weeks already, like a couple of months, with the only aim of sharing knowledge and helping you there outside with the best asset we have, which is the knowledge, insights, and expertise of our professors. So we are lucky enough to have two amazing speakers today who are going to talk about sovereign wealth funds and the dual shock, oil prices and COVID-19. First of all, Javier Capapé. Javier is PhD and he's director of the Sovereign Wealth Research Program at IE, and he's a professor at IE as well. And Diego Lopez, managing director of SWF, Sovereign Wealth Funds, based in New York. Javier is connected from Madrid. So hello both. Thank you very much for being here and for sharing this amazing topic today, Javier and Diego. The structure of the session is going to be the following. Javier and Diego will have their conversation on the topic for 35 to 40 minutes. And then we will open the floor for questions and answers, okay? So at the end of the session, you can write your questions on the chat, and they will be answering directly to camera. Okay, so I think we can get started. So Javier, Diego, the floor is yours.
Thank you very much, Maria. I'll start with the presentation. Hope you all can follow the slides. And the presentation today, it's, as the title says, we will be talking about sovereign wealth funds. For those of you who don't, let's say, get the definition for the sovereign wealth funds, they are among the largest institutional investors in the world. So basically, they are a super big group, a group of super big pools of assets. And we were dealing with the idea of how governments who control these sovereign wealth funds are reacting to the dual crisis, right? Dual crisis because many of these sovereign wealth funds are based in the Middle East, and they have also the COVID-19 situation, right? So they face this dual crisis, and we want to understand whether they are acting in a defensive way, they are more proactive, like trying to solve issues at their own economies, whether they are exploring opportunities to invest. We will also go into the idea of whether they have been anticipated somehow biotech investments. This is going to cover too. And we will also try to explain a little bit on how these sovereign wealth funds in general act, behave, and how did they compare to other institutional investors. So I will start first, and then we will be having a conversation, Diego and I mean, going over different topics, right? The idea is to, in terms of, let's say, a content slide, will be, I'll do a brief introduction with the map, with the general trends of investments and geographic allocation. Then we will continue with the idea of how these sovereign wealth funds act as something called rainy day funds. So basically, how these sovereign wealth funds are precisely defined to come and solve and come as an important help for governments in situations like today. Then we will cover briefly this idea of biotech investments. And then we will deal with the opportunities that they find in the investment arena as global investors in a situation like today of very low valuation prices and opportunities to invest in very, very heavily hit markets, comparing a bit with the crisis in 28, right? So this is going to be the outline, and I'll start and proceed with the presentation. So first thing, this is a map I normally use for an introduction on sovereign wealth funds, because it really resembles several ideas here, right? So first, sovereign wealth funds are 94 sovereign wealth funds, meaning that they are not just one, two, they are 94 sovereign wealth funds, different sovereign wealth funds in the world. 65 different countries have established at least one sovereign wealth fund. And as you can easily infer, I mean, several countries have decided to create more than one sovereign wealth fund. In these bubbles, you can see some of these, let's say, the size. You can have like an idea of the size of the sovereign wealth in each country, right? So you have big poles of action in China, in the Middle East, of course, and Southeast Asia, and also Norway, right? So these are the 4 poles that we normally treat in when understanding the sovereign wealth fund general trends, right? So we have a huge amount of money, 8.3 trillion US dollars, according to our last research. This research is done every year on, by the way, I can show you the report. We produce an annual report every year on sovereign wealth fund trends, and that you can go and check for further information, right? So basically, this is the big picture, right? Sovereign wealth funds from almost all over the world, mainly in the emerging markets, and this is very important. Sovereign wealth funds is an emerging markets story, really linked to governments. Think that governments own or control these sovereign wealth funds. And this brings, of course, this idea of geopolitics implications of sovereign wealth fund investments, right? It's not anymore a private investor, is an investment tool or vehicle used by governments, and it may have, let's say, as a second probably intention after returns, certain geopolitical issues, right? And the last thing I want to stress here in this slide is the idea of heterogeneity that Diego will reinforce later on, right? So this idea of sovereign wealth funds fulfilling different missions, right? This is very important. Not all the sovereign wealth funds are defined or created for the same goal, right? They fulfill different missions. Good. So going a bit into this is just a table representing the top 10 sovereign wealth funds. And this is just to let you know, I mean, a bit of the names of these sovereign wealth funds and what are the main countries, right? So Government Pension Fund Global, despite the name pension in the name, is not a pension fund, and it's a different creature, because pension funds, they have the liability, they need to pay pensions at the end of every month. Sovereign wealth funds, they are pure assets, right? So they basically can deploy assets in a more flexible fashion than pension funds. This is like one of the slight differences between these two cousins, right? Pension funds and sovereign wealth funds. These are only sovereign wealth funds, right? And one important idea here is that the top 10 sovereign wealth funds represent 75% of all the assets of the industry, right? So it's a quite big concentration at the top, right? So this is important because normally we will be hearing almost like on a regular fashion, the idea of sovereign wealth funds. Most of the times they refer to just these 10, these 15 sovereign wealth funds who are very active and that they cover different geographies, mainly China, Middle East, and Norway, and Singapore, right? So basically these names, I'm not saying that you should be familiar, but you will hear these sovereign wealth funds coming into the news, in the newspapers, in the big M&A deals in the coming months for sure. And this is just to make you familiar with these names, right? And also to give you like a sense of the size, right? Think that the government pension fund alone manages more than 1 trillion US dollars, right? This number has declined in the last weeks, but is around 1 trillion US dollars, right? This is almost the size of the economy of Spain, for example, just to give you a sense of how big these sovereign wealth funds are. Again, this is the idea of how active these sovereign wealth funds are. And there you can see again the names of the different funds, starting from Temasek and GIC, both from Singapore. And then you have Mubadala in the Emirates, again, Norway, Abu Dhabi, and so on. This is, again, let's say a quick snapshot of the activity of the funds in the last 2 years, right? So almost 270 deals representing 140 billion, right? This is direct deals where sovereign wealth funds have participated, right? We are not counting here, for example, portfolio of, let's say, of what is called direct investments through portfolio management, right? So basically, we miss indirect investments. So maybe some sovereign wealth funds use a lot external managers. So they invest through private equity funds, infrastructure funds, real estate funds, right? we cannot track that information because it is not available. We refer here to the direct activity, right? So where sovereign wealth funds are the ultimate investor in the industry, in different industries. And in which industries are these sovereign wealth funds are investing, we will see it next. First, let me take a look into the geographic destination, right? So this is not surprise. So basically they prefer the United States, China, and India for the last 5 years consistently, right? So these are the top destinations year after year, right? They prefer the States. They like China because of many of the opportunities, especially as we will see later on in tech, and also India, right? For the opportunities emerging from middle classes, right? So anything related with real estate, with infrastructure, with trade or manufacturing is well received in India. Okay, so let me almost finish with this introduction just by showing you this slide on the sector profile. So basically, where are sovereign wealth funds investing sectorally? You will see here technology, life sciences, real estate, services, and infrastructure. And one interesting conclusion of this sector analysis is that they have moved from traditional sectors like natural resources to technology, life sciences, and services in the last 4 or 5 years, right? So they were very, very focused on energy and natural resources. Probably we will see that wave coming back again. But in the last years, they have focused more on technology, life sciences, and of course, real estate and infrastructure, which are like natural destination for large investors, right? You require, let's say, big pools of capital and a patient capital. So the last slide here that I want you to show you is this first, let's say, shift, right? So what is going on in today's, let's say, in the last months for sovereign wealth funds? And I've used this data from the only, let's say, the most transparent sovereign wealth fund on earth, which is Norway, who is basically, if you go to nbim.no, you can directly go into the instant value of the fund, which is the largest sovereign wealth fund on earth, government pension fund global from Norway, right? Will give you directly into the website in the first page, the size, instantaneous size of the fund, right? So is the transparency will be an issue, and Diego will talk a little bit more on that, but because we are not able to track directly, or let's say every second of many sovereign wealth funds, we need to focus on this one, right? So this sovereign wealth fund has lost year to date more than 138 billion, right? And they plan to withdraw money from the fund of 40 billion, right? So this aggregated is more than 178 billion that is going to be used, let's say, to act as a cushion against the crisis in Norway, which is already facing this dual crisis of COVID and the lockdown, and at the same time, the oil plunge of the prices, the oil prices plunge, right? So if we make an estimation, a very conservative estimation, because we are dealing here with many sovereign funds who are not releasing this information about the strategic asset allocation, but doing a very, very conservative approach, we estimate that at the Sovereign Wealth Research that the losses year to date are around 800 billion, right? For the sovereign wealth fund industry. Remember, it's an 8 trillion fund, so it's an 8 trillion size industry. So this would represent more or less 10%, right? I'll now pass the floor to Diego, and he will continue with this idea of how precisely these losses, right, are in the end kind of part of the definition of the sovereign wealth funds. They are prepared to have these savings for the good years that are going to be used in the bad years, what is called the rainy day. Diego, the floor is yours.
Thank you, Javier. Very kind, and that's very useful. So like Javier was saying, we need to understand a little bit about the difference between the different sovereign wealth funds before we can see the effect that the COVID and every other crisis will have in them. So there are two main characteristics that make sovereigns stand from each other. The first one is the source of the wealth. So there are many funds that are oil-based. So basically they are in countries that are rich in oil. And those countries transfer those revenues into the Ministry of Finance normally. into the government more broadly, and then that surplus or deficit goes into the sovereign wealth fund, right? So the surplus goes to the sovereign wealth fund, and the deficit comes from the sovereign wealth fund. Now, this is a bit different in the countries that don't necessarily have commodities, like Singapore or China, but that have an excess of capital coming from reserves, normally foreign exchange reserves, that are similarly transferred to the government, and then the government transferred them into the sovereign wealth fund. So this is key because the first group is going to be affected by that dual shock that Javier was referring to. The second one, not necessarily. Now, the second characteristic is the mission. So the mission, the governments have many reasons to create a sovereign wealth fund. Normally, you would hear that it's a savings mechanism, but actually, they have also an stabilization mandate or a development mandate, increasingly. So these three missions determine, as well as the source of wealth, will determine the kind of fund that it is and the sort of accountability that it will have in case of any crisis. So Javier was mentioning transparency, accountability, governance, resilience. All these factors will be determined by the source of wealth and the mission. And especially now with the fiscal spending rule, which is, okay, the government is facing a deficit, which fund is really in a position to help us and to provide the capital that we need. And again, that will depend on the sort of fund that it is. So if we can go to the next slide, Javier.
Yes.
Just putting some examples into it. And before jumping into the table, perhaps some quick remarks. You may have seen in the press, there's a lot of noise, especially here in the US and in the UK, that don't have a sovereign wealth fund, a federal level sovereign wealth fund. And there are many discussions around the need to set up a sovereign wealth fund now. Well, I would say, now is not the time to set up a sovereign wealth fund because, first of all, it doesn't create new wealth. It just reshuffles the existing wealth that is in the balance sheet of a country. And secondly, Javier was mentioning the asset managers. It can be a very costly vehicle to maintain. Either you have external managers that move your capital, or you have to hire tons of people to have in-house, and these people are not cheap, right? So, if you're talking about the Abu Dhabi fund, they employ 1,700 people just to carry out their investment policies. And you can imagine the cost that implies in the balance sheet. Secondly, for those countries that do have a sovereign wealth fund, they may help. And you have some success stories like in Chile of funds that have acted in times of crisis and have acted as buffers and have survived. And you have other stories like Algeria that was used completely in the oil crisis of 2016-17 and is now depleted, is now gone. So it may help, but then the important thing now is, okay, who takes the punch, right? So which fund is going to be accountable to cover that buffer? And going back to the different missions, the way I normally put it, and perhaps it's a bit simplistic, but for those that are not too familiar with sovereigns will understand it better. Just go back to the next slide here, please. So if you get the central bank reserves, if you consider that they are your pocket money. So just imagine you are a country, right? And their central bank reserves is your pocket money. But then you have a stabilization fund, which is your current account in the bank. You have a savings fund, which is your saving account in the bank. And then you have a development fund, which is your house, basically. And the Minister of Finance calls you, which is your dad, let's say, and you owe some money to him because he's the one that has provided you the money initially. and you have to repay him because he's facing some troubles, then you start with the pocket money, right? Because it's what you have more available. If it's not enough, you go to your current account. If it's not enough, you go to your savings account. But the chances of you having to sell your house just to repay your Minister of Finance is rare. It's very slim, right? So that's the way it goes. And you can see the arrow: liquidity and accountability. You start by central bank money, then stabilization funds, then savings fund, then development fund. So you will see a lot of noise in the press that PIF of Saudi Arabia or Mubadala in Abu Dhabi are carrying out a shopping spree, right? Going to find, to scout for cheap assets in this environment. And you think, well, how is that possible if they are coming from oil countries? Well, the reason is that if you go to the table and you see Saudi Arabia, there is a huge fund called SAMA, which is about $500 billion US, that is basically acting as a gatekeeper. So whatever deficit Saudi Arabia is facing, and they're already saying that it's going to be 50 billion, but it's going to probably be more than that, is going to be covered by SAMA. So PIF, which is the new flashing sovereign wealth fund, will not be facing any withdrawal or any ask from the government. So they can actually afford to go shop in this environment. And the same goes for Mubadala in Abu Dhabi. Any withdrawal will come from ADIA, which is the savings fund. I will not be asked to Mubadala. So it's just two examples of how it works. Then there are some other countries that actually set up sub-funds. So, if you look at Nigeria, it's actually the same fund, but it has 3 different sub-funds so that they can ensure the survival of the fund in the long term. I think these are just illustrative examples of how different funds are going to be differently affected during the crisis. Javier.
Thank you very much, Diego. That is great. Then this third point, this third point of Diego on who takes the punch is going to be, let's say, the topic of the conversation over the last part of the session. Now, I want to guide you towards something that probably is quite unknown for the majority of us, which is whether sovereign wealth funds have anticipated somehow, not of course the virus, but the need to be, let's say, well prepared on biotech issues, right? So anything related with healthcare systems, healthcare information sharing, any cancer treatment, diseases related with, let's say, urbanization, diseases related with the growth of the middle class, right? So anything linked to this importance of healthcare has been somehow anticipated by some sovereign wealth funds because they have been investing consistently on biotech over the last 5 years, right? So here you have, for example, the data on the deal count of VC rounds on biotech and biohealth, where sovereign wealth funds have participated, right? So they represent the most important industry within technology, right? So this means that they have invested 69 different deals over the last 5 years, acquiring equity stakes, equity positions on companies that are now leading somehow treatment, testing, information sharing in the healthcare industry today and probably in the near future, right? So they have been getting ready for the importance of healthcare that now we are all kind of aware. And I want to think about this in like a switch into the ranking of preferences of institutional investors, and especially those who are linked to governments. Think that, as Diego was saying, if you are a government and you have like these different tools to be used in the financial world, you may want to have some of them exploring the best assets that you can incorporate into your own economy at some sort, right? Or technologies that can be implemented in the economy, right? We will not see this, for example, in a private equity manager who is investing in this country, this other country, right? The returns let's say, are shared among many economies, right? The idea of the sovereign wealth funds, of course, is to have a very diversified portfolio, but also those who have a developmental mindset, they want to have some of these returns to be, let's say, transferred or have a domestic spillover out of all these, let's say, investments, right? So these investments can be seen within this lens of having a development mission, right? Or I want to develop, for example, in the case of, I don't know, Qatar or Abu Dhabi, right? You want to develop a, let's say, the healthcare system, then you try to bring, let's say, medical doctors or engineers in the case of infrastructure, right? Through joint ventures in order to have a better trained workforce in your own country, right? It's a way to imitate the best practices around the globe by investing or co-investing with those who are doing the best in their class, right? So in this sense, we observe these sovereign wealth fund investments in bio and health tech, right? It's quite remarkable because it was the most important tech sub-industry where they have invested in most times over the last 5 years, right? And you see a big drop in 19, right? In all these first 5 months of 2020, right? We observed more than in the years 14, 15, 16 overall, right? So we now have more than 8 deals on sovereign wealth funds directly on biotech, right? Meaning that they are feeling they want to go into this direction because it's important, not from a financial return perspective, but also from a strategic positioning, right? So this is very interesting to have that in mind, this kind of dual objective of sovereign wealth funds of having returns, of course, but also some sort of spillover or an economic effect into their domestic, let's say, economies and sectors, right? Not only this for, let's say, the Asian funds, as Diego explained, because they refer to those who are not linked to natural resources like natural gas or oil, but also for those who are precisely related with oil and natural gas, because they want to diversify away their economies from these two sectors that can influence too much their revenue stream, right? Ideally, the mission of these funds will be to diversify their portfolios. And as one of the Norway ministers said not very long time ago, like 2 months ago, he wanted to stress the idea that Norway's sovereign wealth fund has been able to transform Norway from an oil economy, say, to a fund economy, right? Let's say the revenue that is obtained from the sovereign wealth fund in Norway, like not including this last quarter, right, was the investment income of this over like, I think it was like since 1998, the investment income made in this sovereign wealth fund is higher than the revenue obtained from selling oil to the world, right? So they have been able to switch something that is physical, that is finite, into something that is potentially infinite, and that is generating even more income in the long run than the oil that was underneath, and that probably will have a last day not very far from today or not, but they have been able to switch, right? They are not anymore an oil nation, an oil fund, but instead they have to go into a fund nation, right? So the linkage between the natural resource and the country has kind of been, let's say, bridged using a fund in the long run. So let me continue with this idea of health, right? So where are we investing? Where are sovereign wealth funds investing in health, right? And this is an answer, right? In general, we have observed a lot of investments in the US, in China, right? When we go in biotech or biohealth, this figure goes and grows up to 80%, right? So out of the 5 years, all of the investments in bio and health tech, they have been directed either in the United States or in China, meaning that the competition between these two countries to attract sovereign wealth fund money has been increasing. And it is very important in other tech sectors, in real estate, it's important in infrastructure. But when it comes to bio and health tech, it's completely dominated by these two countries, right? And think that India goes third, United Kingdom not anymore in the European Union goes fourth, then is Singapore, and only in the sixth position we find the first European country, right? This is a big, let's say, gap that need to be, let's say, covered by European economies, not only in comparison, let's say, to the United States, in comparison to China, in comparison to India, right? So we observe this important gap in a critical asset, as we can define it now, such as is healthcare, right? So in a way, we can say, yes, they have anticipated the healthcare importance, right? Not for sure the virus, and they have been getting ready so that now they are more familiar with the sector that has totally different metrics from other sectors. It's a very long term, it's very demanding in capital, right? And it requires a very patient capital because investigations, research on new drugs, new healthcare treatments take a lot of time, as we are now, all of us, very well known because of this, continuous global search of a vaccine against the COVID-19, right? We are now more familiar with this sector that has not been, let's say, the preferred sector for many sovereign wealth funds over the last decades, but in the last 5 years, it reached an important position among the most, let's say, targeted industry in the sovereign wealth fund community. So this last section, before we go with the questions you may have, of course, I want to stress this idea. If you have questions, please go into the chat and we will go over the different issues. In this last section, we'll be covering like a comparison between 2008 and 2020, right? And I'll leave Diego to start with this conversation. Yes, this comparison, because we feel like it's only 12 years ago. Sovereign wealth funds have changed substantially in this period. And at the same time, we feel like we may anticipate a bit how these movements are going to happen, given that the circumstances have changed from the previous crisis, the global financial crisis, to the health crisis we face today. So Diego, now your turn to start with this. And then we, as you know, we have some slides for some of the examples of the data that we have here.
Yeah, that's right, Javier. Thank you. It's only been 12 years, but the sovereign wealth fund industry has changed dramatically. And I think in 2008, I mean, the sovereign wealth fund term was only coined in 2005. And in 2008, I think both Javier and I were starting to learn about this sovereign wealth fund world. But basically, they were acting as a separate and independent pockets of money from very opaque countries. So there wasn't much thought about this industry at all. We were more worried about, big investment banks and private equities than about these independent pools of money that were buying assets. However, they started to be very important for economies. They started to buy big, chunky assets all over the world. And particularly in the 2008 crisis, they started bailing out some of the major banks in the US. So, and I put some of them there, but the list is larger than that. And Javier has kindly put it in the next slide, which is about 56 billion US dollars that were injected from sovereign wealth funds into the financial sector around 2007 and 8. So obviously it was very directed into a specific sector in that particular case, which we are not sure of yet during this crisis. So that will be a major difference, obviously. But then sovereigns are also very aware of each other now. The industry has developed a lot. They are now co-investors. They are now, they meet every year, at least a couple of times in different events. They're all very aware of who is, in the other team, let's say. So they're acting together, and they have the ability to change the market together. And maybe connecting with the previous idea of, the different missions that the sovereign wealth funds may have. In the previous crisis, we saw a lot of savings funds. So we saw a lot of these savings, big, chunky funds that act as a financial investor. So if you look at ADIA from Abu Dhabi, QIA from Qatar, KIA from Kuwait, and CIC from China, they are all investing in minorities normally, and they don't meddle into the operations of their assets. This is very different now, where you have these development funds. First of all, because they don't have that withdrawal that others may face. But secondly, because they're function is different, and they need to provide the local economies with enough knowledge and I would say learning from the assets, right? So you have Temasek from Singapore, sorry, Mubadala from Abu Dhabi, PIF from Saudi Arabia, and the Russian fund. And these are all looking at investing in technologies, in things that they can bring back to their domestic economies to help with their local economy. So it's very different. The sort of players and the sort of industries that we are seeing at the moment, and there were some questions about, you know, Saudi's acquisitions. All of Saudi's acquisitions are being done by that development fund called PIF. And these are normally in industries that are cheap now, that are very affected by the crisis, but they have a contrarian investor view, and they believe that in the future it will be worth it to invest in them.
Yes, Diego, if you remember, we were talking about this like a week ago. If you remember, when we were dealing with this, let's say, what is going to be the preferred sector for sovereign wealth funds, right? And then we redo this table that we have from the 56 billion invested in financial institutions back in 27 and 28. During that crisis, we even had, if you remember, this idea of, I think it was a full FT Financial Times series on the future of capitalism, right? And we were even thinking about whether banks will gonna be banks again, whether we will see investment banks that almost disappeared those years, whether private equity will have a role, right? So it was a huge discussion about the disruption of a very, very important sector in the economy. And we were not even sure that this sector is going to recover from the crisis, or that it will recover in a different way, right? So it looks today that travel, tourism, and also energy today, because of this, let's say, coincidence of the oil price plunge with the COVID-19, that it has then, let's say, simultaneous effect, I mean, let's say, interactions with each other. Whether it's airlines, whether it's, I don't know, Zoom valuation is higher than the 5 largest airline companies in the world today, right? So where are we going is not very clear. And that's why it's too risky for many sovereign funds like PIF to enter into companies like Boeing, like Marriott, right? Like Carnival, if you remember, right? They have invested in a cruise company, right? I mean, no one is thinking to go on a cruise. I mean, these days, I mean, with the virus, is still very present in most of the parts in the world, right? So we don't know whether these companies are going to recover at all, but of course it's very, very interesting to get and approach this blue chip, right? Is companies beyond BP. So for example, it was Facebook also included in the shopping spree, right? To me, many of these movements recall, I mean, the Qatar Investment Authority in 28, right? It was a young fund. They want also visibility. It was important for them, you know, to make a name in the industry. They have a very, very, let's say, strong chief investment officer who was able to deal with many companies when they bought Harrods, when they bought the stake in, I don't know, in Volkswagen, they bought J. Sainsbury in the UK, right? So we have seen this, but at the same time, which is very, I don't know if new, but at least is kind of contradictory for many, they are issuing debt, right? So at the same time, they are issuing debt. And I want to go into this point because as we discussed the other day, it looks like for them it's still cheaper to raise money using debt markets, because they have a quite strong let's say debt position. I mean, debt pile is not that big in comparison to GDP, and of course not in comparison to any Western economy. And they are getting enough interest. If I recall it correctly, Saudi Arabia received, no, it was Qatar, received more than 44 billion bets on their 10 billion bonds. So it was a very successful sale. And they are making they are raising money in this way, not to, let's say, withdraw money to their funds directly, but instead receiving money very cheaply to invest in more lucrative or more let's say, higher return investments in the future on these blue chips in Europe and in the US, right? It's very interesting how we are starting to see this, but my point goes into the timing, right? Probably it's too soon to see other sovereign wealth funds joining this because they need to face domestic issues at the same time, and they are still like willing to make sure that these industries the PIF is investing in are going to survive after the crisis, right? What is going to be the tourism industry after this? What is going to be the hotel industry? I mean, there had been a lot of, firings in companies such as Airbnb, in any mobility, in the mobility industry, a lot of startups such as Uber, right? Because the lockdown is really affecting today, but probably it's going to affect the day after tomorrow, right? So it's very interesting how these are parallel movements, because at those years, we really think that the financial industry is going to be different. We're going to be different. And today we are thinking that tourism, traveling is going to be different too, right? Diego, can you hear me? Yes, right?
Yes, yes.
Okay, perfect. Yeah. So I was saying this, and jumping into the last part of the session before we go with the questions, which is this idea of sovereign wealth funds acting directly on the healthcare crisis, right? So we have seen several cases of sovereign wealth funds, as you said, with the development mission. They need to take care of the economy, but also in these days, they need to take care with the health crisis, right? So we have seen few cases, right? As I said before, Temasek, representing any of the sovereign wealth funds, is investing in Chinese, in US-based startups doing healthcare and providing new solutions, treatment on many issues, not only on COVID-19, but on many issues related with diabetes, related with cancer treatment, and so on. And then we have Russian Direct Investment Fund, which is a very particular sovereign wealth fund. It has been able to attract a lot of money from many other sovereign wealth funds around the globe into the Russian economy, in a way also to, let's say, cope with the sanctions imposed by the US and the European Union over the last years. And they have been able to attract a lot of capital using this co-investment model that Diego referred before. And given their development mission, they have been aware from the very beginning that they can do something directly for the economy, and they decided to create an alliance of different, let's say, actors in the Russian economy, and establishing alliances with Japan, for example, Japan healthcare and drug and pharma companies developing, in this case, tests, right? So they have been able to generate this group very, very quickly, and to start producing tests that are going to be used not only in the US, in Russia, but they have been also able to export these tests to the US, right? Bringing a very interesting, geopolitical situation of Russian, let's say, servicing or providing in a very, very, let's say, dynamic fashion tests for the US, right? So it brings a lot of, it resounds very strongly to me on the, for example, the Chinese investments made on Blackstone or Morgan Stanley during the worst part of the financial crisis, right? So in the end, these investments can have, let's say, a dual objective, as I said before, right? It may have a very important return objective, but at the same time, it may also establish like a new image within countries, right? Or a new, let's say, brand for the country in relationship with the others, right? And I also post this case of Alaskan Pension Fund, which is a very innovative platform used to, let's say, finance asset managers who are like looking for assets such as biotech companies developing, in this case, directly treatment that are going to be used against COVID-19. So as you see, in recent weeks, literally in recent weeks, we have been seeing like countries going into the debt markets just to issue debt and get cash, which, as Diego said before, cash is king in these days, right? They need this cash. And instead of selling the companies they have in their portfolio, which is more and more an unlisted portfolio, right? That they don't want to realize this valuation drop, right? They want to get money from the debt markets in order to have this opportunity to invest for the long run in these either blue chip or energy companies or in the travel and tourism industry. if you want to add anything, Diego, it's your turn, and then we will leave the floor for questions.
Sure, no, that's very interesting, Javier. And I think, you know, what people don't realize is that when they see PIF in all the newspapers, what they don't realize is that they also have a very significant portfolio of assets in-house, so in Saudi Arabia. They are now developing a whole city by the Sinai Peninsula called Neom, and which has been valued at $100 billion, which is a third of the fund. So they are, you know, pursuing these huge investments overseas, but actually their domestic portfolio is much larger than that. So it's going to be interesting how they juggle, how they combine that portfolio of foreign investments with the domestic assets that they got. So as you said, we are still in the early days of the aftermath, and the next few months and years are going to be very interesting.
Okay, thank you very much, Diego. I think it's time for questions in the audience. So we are very happy to answer any of the questions. We have several questions from Ben, mainly based or related with the oil-based economies and how these sovereign wealth funds may use directly these tools to enhance. On the one hand, they're directly their oil sectors, but at the same time, bring in technology, bring in innovation, and also fostering development. This is gonna be a big group of questions, and we can answer directly that. And we also have, if you make several questions, then we can group them if you want. So then there is this question on sovereign wealth funds investing in biotech, coming from Franklin Delgado. Thank you very much. And maybe we can start with this first idea, right? Which is a different topic coming from Ben Fall. Thank you very much. Diego, if maybe you want to answer this on how can wealthy sovereign wealth funds help to support developing nations who are in worse situations? What is like your view here, whether you feel like sovereign wealth funds will go and help, whether they are defined to do so, whether they have, you know, a space to do so, they have flexibility to do so, or their missions are very tight or very defined? What is your view? What do you think?
I mean, this is a broad discussion that I think the Santiago principles have tried to address over time, yes. Which is, what are the intentions of sovereigns, right? Are they purely economic plays, or do they have a political agenda and so on? So it's been clear to me over the years that government MOUs, so agreements between governments, can drive investment agendas. So Javier was mentioning before about Russia. All the agreements that Russia has signed have been instrumented through the government, and they have an impact on how the sovereign wealth fund is investing and is receiving money. Now, you know, the matter of helping others, probably now, and especially if we talk about Gulf-based countries, funds, is a tough one to answer. They obviously are very concerned about their situation at home, especially Saudi. I mean, if you look at Saudi, they're very different than the rest of the Gulf. The rest of the Gulf, their local population is very slim. There are only 300,000 Qataris in the world. There are only 1 million Emiratis in the world, but there are 33 million Saudis, normally of very young age, that they need a future in the country, right? So Saudi, for instance, is very aware of this situation, is very aware of that whole deficit that is gonna come this year. I was mentioning 50 billion, but it's gonna probably be more than that. So, you know, the matter of helping others, developing economies, it may have to come later on.
Yes, probably this topic brings this idea of some confusion that have we have had, even because there is also blurred lines, like because some sovereign wealth funds as Diego said, they fulfill different missions. It's not very clear whether the savings stops with the development, and the development with the stabilization. But of course, these sovereign wealth funds are not, I mean, their main mission is just to make a return, right? And to ensure that the wealth of the nation is preserved or is even augmented in the future, right? So they normally don't go, for example, as we have seen in the slides, right? Their investments in Africa are very, very reduced, right? It was only one sovereign wealth fund, now completely frozen since the war in Libya, right? Who has like different units investing in different infrastructure in the North Africa. Of course, we have the case of Nigeria, which is a very interesting one, and is doing a great job in the economy, Senegal, but in general, we don't see other sovereign wealth funds from other parts of the world investing, for example, in Africa or not many in Latin America, right? They have been doing something on infrastructure, for example, or oil-related investments in, I don't know, in Peru recently, or in Chile in infrastructure, or in Brazil, of course. But we don't see this, let's say, approach of NGOs or even aid, right? Is not in their NDA anymore. It's just basically they just focus on return and on making an expected return, adjust to risk, and they want to fulfill their mission, I mean, on the benefit of their citizens. And as Diego was saying, precisely those countries who have a huge population who is going to be suffering more the impact of this lockdown, the COVID-19 crisis, right? They are somehow looking for profits outside, but just very focused on investing at home, right? Because there is a need, right? The rainy day, as Diego was saying, the rainy day is here, right? And they need to use that resources to foster, to protect, and to develop the economy in the next weeks. Other question is this: will sovereign wealth funds biotech investment increase in the near future? As I said before in that section, we have seen this trend over the last 6 years. So it's not just a coincidence, let's say. I mean, it's not that sovereign wealth funds are starting to invest. What I can say, or what we have observed, is that they are restarting their investments in biotech, and we may see what I may expect from sovereign wealth funds, especially those who have a development mission, is to have a certain portfolio dedicated to support the efforts of the government, first in the rescuing packages, for example, that are going to be developed in many countries to face the jobless situation, or to, let's say, help the financing of SMEs, small and medium enterprises. We may see, and we already have seen this in many countries, like in Ireland is doing this, Turkey is doing this. Of course, we expect that the proceeds of Norway that are going to be transferred to the government are going to be used in the rescuing package, right? So we expect these development funds to use their capital, and we will see governments tapping these sovereign wealth funds to face the crisis. But in the mid to long term, we will expect sovereign wealth funds to have a higher share of their portfolio dedicated to these issues, as they believe they are strategic issues, right? So probably we will see more sovereign wealth funds entering into pharma, entering into biotech, entering into healthcare systems, right? In order to understand that for their own economies, right? It will be it will be following a logic that has been already seen in infrastructure, it has already seen in fintech, it has already been seen in real estate, right? So we may expect this as a way to learn from the sovereign wealth funds how to use the best in class globally of the different sectors, in this case, strategic sector such as is healthcare today. What do you see the long term? We have another question, Diego, from Max Gudat. Thank you for the question. He's saying, where do you see the long-term drawback for European Union countries missing investments in sovereign wealth fund today? I don't know if I get it right.
I
where
guess
do you see the long-term
investments
drawback
from sovereign wealth funds, or?
Yeah, I may expect this from sovereign wealth funds, right? Yeah.
I think that's what they mean. So that's an interesting question, and I think it goes back to the perception that governments have as recipients of that investment, right? So normally in the good years, nobody needs money, right? So if Chinese funds or Middle Eastern funds are investing in your economy, you are very concerned about national security and you're very concerned about geostrategic issues. But in the bad years, such as today, you need capital from everywhere, and you are more keen to overview or disregard where is that money coming from, right? So if you guys remember in 2008, I think Sarkozy took a very active role in pursuing road shows in China and the Middle East. He was actively raising money on behalf of Arriva, on behalf of all the main French companies, whereas maybe a couple of years before that, he was probably reluctant to receive that capital. So in the coming years, I would expect the EU governments to be more open to receive that money. I mean, here in the US, traditionally CFIUS, which is the organism within the Congress that can block a foreign acquisition, has been more adamant on Chinese investors than with Middle Eastern investors. And now you may have seen in the press, the actions that the administration is taking against China. In the European Union, it may be different. It may be country by country, but we expect more resilient towards that foreign money coming into their economies. Do you agree, okay, Javier?
Yeah, I agree. And maybe just to add that the European Union has already designed and established a mechanism that is very similar to CFIUS in the last months as a response to the demands of mainly the Germans, also related with the Chinese investments in what they believe are strategic sectors that they don't want to see being controlled by Chinese corporations, normally state-owned enterprises. So we have in Europe, we have already established this mechanism that is sharing information between countries in order to let's say to have a coordinated action towards foreign investments coming directly from state-owned vehicles, right? Good. So we have other questions. Here we have a question from the UAE, very interesting. We already kind of answered what Max was asking about the missing investments, also related with what Madi is saying. Thank you for your questions on the whether EU is an interesting place or not for the sovereign wealth funds. I may say yes, it's an interesting place. Is a very, very important destination for sovereign wealth funds consistently over the years. Not on the biotech side, but definitely is an important destination in aggregate on other sectors such as real estate, infrastructure, but also blue chip companies, right? So they are losing track because China, the US are preferred destinations, but it may also have a geographic implication because Southeast Asian funds are investing too heavily in China, and many of the sovereign wealth funds in the Middle East like a lot the US, but definitely Europe as in aggregate is an important destination in the overall sectors, not in the biotech in this case over the last 5 years. Then we have these three questions from the UAE. Let me see if we can merge with the new question coming from BN. So take into account climate change. Yeah, this idea of climate change would be very interesting, and maybe we can link to the second question the third question brought by this gentleman, lady from the UAE, which is who's talking about how do we interpret, Diego, the idea that sovereign funds are investing in energy when they want to diversify their economies away from oil, right? How do we interpret this? It's a very good question. Because it looks like with the crisis, they are reinvesting in the traditional energy sector, right? Let me make a first guess. So first, many of these investments will really will really come from sovereign wealth funds who are not that, let's say, inclined towards the green agenda, let's say. And also it brings another interesting paradox within the sovereign wealth fund community, which is the fact that many sovereign wealth funds who are like pushing the green agenda also, let's say, receive the revenues, right? They grow their funds out of selling either oil or natural gas to the world, right? This is the case even for Norway, right? If we think in Norway, they have a green agenda, of course, and they want to, they recently delisted all the oil companies and in Canada, it came into the news recently. They have had different delisting, carbon-based companies. They delist companies because they are surpassing certain levels of contamination and pollution. So yes, but the truth is that they have grown their fund by selling to the world natural gas and oil, right? And the same is happening with the Middle Eastern funds. They are basically selling to the world oil and gas that is in turn contaminated the planet. But of course, they want to, at least not in the source, but at least in the destination, they want to have a greener impact, right? And that's why they are delisting certain companies. They are deciding to invest in renewable energy, as it was approved by the parliament in Norway almost, let's say, 10 months ago. So we may see these contradictions all day in the sovereign wealth fund community, right? They are large investors. As we said before, main mission is to obtain returns. And if they are able to observe like an opportunity to make a strong return in the energy sector these days, because they can buy at a very cheap price, they will probably do so. And again, probably this is not going to be representing a huge percentage of their portfolios, which are already invested either in domestic important projects or in other sectors, right? So I may see this more in an opportunistic view. And also we need to track whether other sovereign wealth funds will follow suit, right? I will not see sovereign wealth fund from Norway doing this, but you may see PIF, or we may see, I don't know, Kuwait or ADIA, you know, getting the opportunity to enter into this energy sector today at a lower valuation, right? But probably this is going to be more opportunistic from a sovereign wealth fund such as PIF, who is acting opportunistically these days, and in a contrarian way that is in a way supporting global markets.
Yeah, maybe quickly, Javier.
Yeah.
Diversification is not only sectorial, but also geographically, right? So if you guys remember, there was a fund called IPIC in Abu Dhabi that used to invest in oil and gas globally, and actually bought 100% of CEPSA in Spain. And they did so just to gain geographical diversification as opposed to sectorial diversification. And now they are integrated into Mubadala, which, as Ben was saying in the chat, combines with other more sustainable assets or arms, such as Masdar. But I think on climate change, what the funds are learning now is that they have to build resilience in the portfolio, and that the next crisis may come from climate change, actually. So I think they are very aware of the climate change now, or more so than before COVID-19. And I would expect that they start making proper investments into sustainable areas very soon.
Yeah, I agree. And as we are, Diego and I have been discussing, they have also even created this One Planet group. For those of you who are interested, you can go into that website. You will see this initiative from sovereign wealth funds, let's say, trying to integrate this long-term risk of climate into their portfolio and investment decisions, which are like the main mission of the group. So time is up. I'm sorry if we are missing some of the last questions. I think we have covered many of the issues. Thank you very much for your attention. And now we will leave Maria to make the closing. So thank you very much to Diego. Thank you very much in the name of the Center for the Governance of Change at IE. And yeah, it was a pleasure. So Maria, the floor is yours. Thank you very much.
Thank you, Javier, and thank you, Diego, so much. It's been an amazing conversation. I think, yeah, many questions. So people have been really connected throughout the whole session. I hope everybody keeps safe. I'll remind you the link where you can find the recording of this session and other sessions we've had in the coming ones, leading complex times. Thank you everybody for being connected. And again, Javier, Diego, I hope to meet you face to face soon. Thank you very much.
Thank you very much, everyone.
Bye.
Thank you, everybody.